If you are single, you are paying a silent, invisible tax of over $10,000 a year just for existing. Here's how the economy is rigged against solo earners and the exact blueprint you need to beat it. Let us start with a harsh reality check. Our world is built for couples. From housing and tax brackets to grocery packaging, cell phone plans, and vacation packages, almost everything is cheaper per person when you share your life with someone else. Financial experts call this the singles tax. It is not an official government tax, but it is a very real financial penalty that drains your net worth. Think about it. If a couple rents a beautiful one-bedroom apartment for $2,000 a month, they each pay $1,000. If you live alone in that exact same apartment, you pay the full $2,000. You also bear 100% of the utility bills, the internet, the streaming services, and the cost of home insurance. Over a course of a year, these split expenses save couples tens of thousands of dollars that they can put straight into high-yielding investments. Meanwhile, you are working twice as hard just to keep your head above water. And it does not stop at housing. Think about travel. Have you ever tried to book a cruise or a tour package alone? You are often hit with a single supplement fee, which is a literal penalty charge for not having a partner to share the room. Think about food. Groceries are packaged for families, meaning singles often pay a premium for smaller portions or end up throwing away spoiled food. Even our tax system in many countries favors married couples with joint filing brackets that can significantly lower their overall tax liability. But being single does not mean you are destined to stay broke. You can absolutely build massive wealth on a single income. You just have to play the game differently. Here are 4 actionable strategies to beat the singles tax and level the playing field. First, we have to tackle the absolute biggest drain on your wallet, which is housing. Since you do not have a partner to split the mortgage or rent, you need to get creative. One of the most effective ways to do this is house hacking. This does not mean you have to live with random roommates forever. You could buy a duplex, live in one unit, and rent out the other to cover your mortgage. If that is too extreme, consider renting a 2-bedroom apartment with a close friend instead of renting a 1-bedroom alone. The price difference between a 1-bedroom and a 2-bedroom is usually only a few $100s, but splitting it cuts your housing costs drastically. If you value your absolute privacy and want to live alone, that is fine, but you must make a conscious trade-off. To afford a solo apartment, you might need to live in a slightly older building or a less trendy neighborhood to keep your housing costs under 30% of your take-home pay. Remember, every dollar you save on rent is a dollar you can invest in your future self. Second, let us talk about the solo food blueprint. Have you ever noticed how grocery stores punish single shoppers? Buying in bulk is always cheaper per ounce, but a single person cannot finish a giant family pack of chicken breasts or a massive bag of spinach before it spoils. To beat this, you need to change how you shop and cook. Stop trying to cook a brand new meal every single night from scratch. That leads to food waste and high grocery bills. Instead, embrace the cook once, eat twice rule. Cook a larger meal of 3 to 4 servings, eat 1 portion, and immediately freeze the rest in individual containers. This gives you your own healthy, cheap frozen meals for busy nights. Also, do not shy away from buying club memberships like Costco or Sam's Club. You can partner up with a single friend, split the membership fee, shop together, and split the bulk items right in the parking lot. You get the bulk discount without any of the waste. Third, you need to simulate a dual income through aggressive automation. When you are in a relationship, it is easy to save money because you have 2 incomes pooling together. To match that wealth-building power, you have to create artificial scarcity in your own budget. The best way to do this is to pay yourself first. Set up an automatic transfer on payday that moves 20 to 30% of your income straight into your investment accounts before you even have a chance to see it or spend it. By automating your savings, you force yourself to live on what is left over. This prevents lifestyle creep and ensures your wealth is growing in the background, even if you do not have a partner contributing to your household net worth. Treat your savings goal like a non-negotiable bill that must be paid every single month. Fourth, you must build the ultimate solo safety net. As a single person, you do not have a financial backup plan. If you lose your job or face a medical emergency, there is no partner with a second income to carry the mortgage while you get back on your feet. Because of this, the standard financial advice of keeping a 3-month emergency fund is simply not enough for you. You need a solo solvency fund. This is a fully funded high-yield savings account containing 6 to 9 months of your bare minimum living expenses. Having this cash cushion does two things. It protects you from high-interest debt during a crisis, and it gives you immense career leverage. You can walk away from a toxic work environment or take a calculated career risk because you know you are your own financial savior. Beating the singles tax is not about depriving yourself of a fun life. It is about recognizing that the economic system is not designed for solo earners and choosing to be smarter than the system. By optimizing your housing, mastering your food budget, automating your investments, and securing your safety net, you can build a life of freedom and abundance on your own terms. If you found this advice helpful, please hit the like button and subscribe to the channel. Let me know in the comments what your biggest struggle is as a single earner. Let us build wealth together, one step at a time.